XAUUSD is one of the most popular Forex pairs to trade. Can you even call it a Forex pair? It's a commodity pair. When I first started trading, I got absolutely obsessed with gold, and I have been burned by it more times than I can count. And looking at the data at Lark Funding, it is number one, by far the most popular asset to trade. But number two, it is one of, if not the most failed asset to trade. Traders consistently get burned. And being a trader myself for 6-7 years at this point, I have learned almost every single mistake that you can make trading this asset. Now, I am by no means an expert. However, I have come to learn over my years of losing money that there is a secret tool when it comes to trading XAUUSD that not enough traders talk about, and for me, it made the wildest difference. And so in today's video, I want to share what this tool is. It's a very actionable, very simple, yet powerful tool that I think if you are trading gold, or if you are trading actually any US denominated asset, you have to integrate this into your trading. So grab a cup of tea, a cup of coffee. We're going to dive right into the secret tool and the reason behind why so many traders just suck at trading gold. Okay, so first off, let's take a look at gold. You see, most traders think that you can just focus on technical analysis and that's going to be enough for you. I'm constantly reminding everyone on the channel, and myself included, that if 90% of traders fail, we need to do something that 90% of traders neglect. And that is fundamental analysis. You see, the vast majority of traders think that you can focus on technical analysis alone and that's going to make you money. And that is not the case. Yes, you can get lucky by just focusing on technicals, but long-term consistently, it's not going to be your ticket to profitability. And I urge you, if there is any trading influencer out there that is telling you that you can make it in trading without fundamentals, that you can completely ignore them, they are a scammer. They have no idea what they're talking about, and they're only saying that because they don't understand fundamentals themselves. They haven't put in the effort that is required to learn market dynamics, risk sentiment, all of these things that actually move the market. The market does not move 100, 200, 500 pips because of some random trend line. It moves because something in the real world is actually happening. That doesn't mean you just neglect technicals. Technicals are amazing at helping you find entries, but it is fundamentals that dictate the direction of the market, and so you can't neglect them. And so we're going to apply this directly to trading XAUUSD gold. So we have here the gold chart. But when you are trading a US denominated asset like gold, you can't just look at this on its own. You see, the reason the stock market has absolutely crushed it this year, the reason the S&P 500 is up over 22% this year, is not necessarily because stocks and companies are becoming more valuable. It is because the asset that they are denominated in is becoming less valuable, aka stocks are denominated in US dollars. The US dollar is getting weaker, which is driving stocks higher. We have global liquidity on the rise. Interest rates around the world, including in the US, are dropping, which weakens the US dollar, which is why our crypto and equity bags get pumped. So bringing that back to gold, everybody just focuses on the chart, which is why they get burned. It's not about just trading the gold chart on its own. It's about looking at the value of the dollar, the DXY. When I do my analysis on gold or any asset that's denominated in US dollars, whether it's Euro USD, Bitcoin, US yen, doesn't matter. Any US denominated pair, I always follow the chart. I'll do just as much analysis on the dollar index as I will do on gold or whatever it is that I'm trading. So let me show you in real time what this actually means. So let's say, for example, we are looking for a short on gold. We'll say, just as an absolute beginner analysis, we're at a resistance level here. So we are looking to take a short. Now, you could say there's a resistance, maybe there's a fib level. The exact analysis in this situation doesn't matter, but we have done our analysis and we're saying we're looking for a short on gold. We expect the price to drop. Now, rather than just taking a trade, there's an extra level of analysis that we now need to integrate into our trading routine, which is looking at the dollar index. So bringing it back to what I said previously, if gold is going to drop, what do we need to see on the dollar index? We need the US dollar to rise. We need it to be at a support level. We need it to be trending upwards in order for it to support our gold trade idea. Okay, so now that we know that we want the short on gold, let's jump over to the dollar index. We're looking for some kind of support level. And at a very first glance on the 1 hour chart, I am not seeing it. In fact, I'm actually seeing a resistance approaching right here. If we zoom out on the higher time frame, the 4 hour, you could see that the trend is absolutely in our direction, which means medium, long term, our short bias on gold could absolutely be the right move. However, the timing of it doesn't look to seem really aligned. We have hit this resistance level this entire week as of this recording. This will be the third time that we'll be hitting it. It's kind of a triple top that's forming. This looks like there's a lot more resistance on the dollar rather than gold. So again, coming back, we're looking for a short because of this, but the dollar index is saying something completely different. And this is what's going to allow you to avoid having so many losses on the pair. Everything could look absolutely amazing, but then when you hop over to the dollar index, it's an added confluence. It's going to give you a red flag or a green flag in terms of whether or not you should actually be taking the trade. So because of this non-extra confluence, because I don't have the dollar index confluence, that would be a red flag for me to not take this trade. So I would now not take this trade. But if we dive in a little bit more, maybe we can find a different trade because of it. So for example, we can see here that gold is at a resistance, which means I think gold's going to drop. In order for gold to drop, we need the dollar to rise, but that's not happening right now. So if the dollar index is about to drop because of this resistance, what kind of buy could we potentially see? Well, maybe if we were to hop down on a lower time frame, you could see here, we've already had the double top resistance on gold. However, because of the dollar index, we know that maybe there's actually a bull case for gold. You could see on a smaller time frame, perhaps a smaller term pullback, such as to the 38 level or the 61. If we throw our moving averages on, we have one lining up with the 50, one with the 61. So we could look for a buy off of this area to jump into short-term buys on gold, which would be supported by the US dollar dropping. Now, it's important to note that roughly 50 to 60% last time I checked of the dollar index is the Euro US value that's being translated over to the DXY. That's because obviously Euro US is the most traded asset currency pair in the entire world. So it's not always going to be one for one, right? If this moves 1 pip, it doesn't mean gold's going to move 1 pip. It's not a perfect correlation, but it's still strong. And so I use this both on small time frames and large time frames. If I'm doing my Sunday night analysis, I'm going to look at the daily and the weekly chart to see what's going on. This obviously is combined with the news. I'm always reading the news, seeing what's going on in the global landscape. But we could see here that on the daily chart, we have had a retracement just through the 50 fib level, but we're now hitting all of these major moving averages, the blue being the 100 EMA or SMA, one of those. And we're starting to have a lot of, friction in this area. It's been several days now that we haven't been able to break higher. The 61 could be a nice area as well. So we're always doing our high level, high time frame analysis on the dollar index and then translating it over to gold, to all of our US denominated assets, including Bitcoin. If we take a look at Bitcoin, we can see here on the 1 hour chart, we're up 1% for the day. Okay. We had a drop here on this trend line, and on the dollar index, we're at this resistance. So if the US dollar, I'd be more interested now in taking buy on Bitcoin, because I'm expecting the US dollar to drop slightly, which will support gold moving higher. And so you could have used that analysis at this perfect pullback area literally just an hour or two ago. Right there, we had a pullback just before the 38. We could have probably thrown it on here. Perfect bounce off the 50 and then the moving average as well. So this actually was a great trade. I wasn't watching it, but using the dollar index would have supported this trade absolutely perfectly. So that was something to watch. Definitely I was out, so I missed it. But overall, we see with the data doesn't lie. So many traders struggle to trade successfully and profitably gold, and I am one of them. It's a very difficult asset to trade. However, by combining the dollar index with your analysis, it's not only going to help you avoid so many trades that aren't going to work out, but it's also going to strengthen your analysis and help you find more winners. It made a massive difference for me, and I hope it does for you. If you have any questions, drop them down below. We'll see you in the next one. And until then, peace.